Happy Wednesday. Welcome back to this week's market update. We've got a lot to unpack today, from the new GDP estimates, the Fed Jackson Hole Symposium, mortgage application trends, builder confidence, even Warren Buffett making a huge move into housing, plus some really encouraging news on mortgage delinquencies. Let's dive in. So let's start with the economy. Everyone's been focused on inflation and job numbers, but don't forget, the Fed also pays close attention to GDP. And right now, estimates for the third quarter GDP are all over the map. The Atlanta Fed is calling for about a 2.3% growth. New York Fed is close behind at 2.1. JP Morgan has it down to 1.5. Goldman Sachs is at 1.4. And then there's the big outlier. The St. Louis Fed actually has a negative projection of negative 0.3%. Now, these are annualized numbers, so even though the spread looks so big, quarter to quarter, it's not as massive as it sounds. Still, it's meaningful. The big differences likely come down to trade. Quarter one trade was strong, second, a little bit slower, and three is tough to predict. Bottom line, the economy looks softer, and that could give the Fed more reason to lean toward future cuts. And speaking of the Fed, it's that time of year. The Jackson Hole Symposium kicks off tonight, and all eyes are on Jerome Powell's short but very important speech Friday morning at 10 a.m. If he hints at being more dovish, we could see momentum for rate cuts build, and that's the kind of thing that moves mortgage rates quickly. Another piece in play here is jobs data. We've had significant downward revisions to employment recently, meaning fewer people had jobs than originally thought. Why does that matter? Well, because when you measure the economy through the gross domestic income, basically dollars earned instead of dollars spent, those weaker job numbers mean weaker income numbers. We get GDI later this month, and if it comes in soft, that could also push GDP expectations lower. And weaker GDP usually helps the bond market, which in turn helps mortgage rates. Now let's bring it back to housing. Mortgage applications last week were pretty flat for purchases, and refis dipped a little bit, but keep in mind, that's after a massive 23% spike the week before. So overall, activity's holding at higher level. Rates right now are right around 6.6 to 6.7% as a national average. And here's some good news. The spread between mortgage rates and the 10-year Treasury has been narrowing. It's at about 2.3%, right on target with what we were expecting and hoping it to be. If that spread keeps shrinking back to historical norms, we could see mortgage rates come down even further, even if Treasuries don't move that much. On the builder side, confidence in new construction remains low. The NAHB Builder Sentiment Index came back in at 32, which is technically negative territory, and it's been stuck in the low 30s for 16 months straight. Builders are still facing high rates, supply chain challenges, and tough regulatory hurdles. But here's a twist. Warren Buffett clearly sees opportunity. His company, Berkshire Hathaway, just dropped nearly $1 billion with a B into two of the biggest home builders, Lennar and D.R. Horton. That's a massive vote of confidence that long-term, the US needs more homes and that builders are the ones who will supply them. Both stocks jumped on the news, and it's a reminder, even when sentiment is low, smart money looks ahead. Now, for some positive housing data. Mortgage delinquencies actually ticked down in the second quarter. The delinquencies rates dropped to 3.93%, well below the long-term average of about 5%. Foreclosure starts are also down. Conventional loan performance is still near record lows, though government loans are seeing a little more stress. For realtors, this is a great talking point. Despite all the headlines, most homeowners are in good shape financially, and housing fundamentals, they remain strong. Couple of other quick notes. There's a 20-year bond auction today at 1 p.m. Eastern, which, based on when you see this, may have already happened, but this could impact the markets. Fed minutes are released at 2 p.m. Eastern. Tomorrow we'll get existing home sales, which I'll cover next week. And one oddball story that's making waves, Fed Governor Lisa Cook is under scrutiny over possible owner occupancy issues on her own mortgage applications. It's early, details are thin, but it's worth watching since she's historically been on the hawkish side of Fed policy. So to wrap it up, the market is in a tug of war right now. Economic growth is slowing, which could help rates, but builder confidence is still low, and we're waiting to hear what Jerome Powell says on Friday to get more clarity on where the Fed is heading. For realtors, here's the key takeaway. Buyers still have opportunities, homeowners are financially stable, and mortgage rates could get some tailwinds if GDP keeps softening. Well, that's all I got for today's market update. Don't forget to like, subscribe, and turn notifications on just in case there's a little surprise update on Friday after Powell's speech, because we know that could be a big one. And if any of you or your clients or your friends or family need to walk through or want to know what these shifts mean for buying, selling, or refinancing, please reach out anytime. Thanks for tuning in. I'll see you next time.